Seacrook, what's happening? David, Hoosier in DC. Good evening. Tough. Okay, who do we got over here? Nobody there yet. Just getting warmed up there, getting warmed up there. Everybody's getting warmed up. And there we go, and there we go, and there, come on, there we go. All righty. Good evening, everyone. All right, first and foremost, my name is James. Good evening. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. That's my goal. Okay, now, I am creating this video for my children and my grandchildren. Someday I won't be here and they'll get to watch all the videos I did almost every single day and hopefully feel like they're still here. Hey, how you doing? All this nice, keen, fun stuff. All righty. John, good evening, and how are you today? All right, let's get started. Now, we had a whole bunch of stocks from last night. And then we didn't quite do all of them. So let's see what we can take a look at tonight. Tonight, U.S. Steel is first on the list for this evening. L, good evening. L, D-Bus, Harley Ford, what's happening? Neil Sells, good evening. Bazooka, Beefa, good evening. Bobo's in the house. John wants to take a look at SoFi. I don't know why. Jay, good afternoon, good evening. Kind of nice, neat, fun stuff. Mr. Bill, good evening. All right, so first one on the list is going to be U.S. Steel. So let's see what's going on with U.S. Steel. KB Toy. All right, at Starbucks. Oh, let's take a look at Starbucks while we have it up, Okay, so yeah, I jumped into Starbucks yesterday. Mr. Bill is right, James. Cool beans, Mr. Bill. Oh no, it's Mr. Hand. Watch out, Mr. Hand. What are you doing, Mr. Hand? Oh no, Mr. Bill. Sorry. Anyway, Starbucks. Let's take a look at Starbucks. Here's our high. Here's our low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down, up. It's currently at 84.45. So what does that mean for us? Well, 84.85. Okay, so more than likely we'll be looking at the 85s. So let's take a look at the 85s for a second. Not even on here. Now, I did buy some the other day, and I sold the 83s because I thought it was a safer trade. Well, why not? Well, because that's what I'm looking to. I'm looking to get a simple, safe trade. Well, before we do that, let's take a look at the chart. Okay, the high, low, we did all that stuff. Let's take a look at the numbers. A year ago, Starbucks was at 88. All right, 79.88. That's 88. All right, then a big drop. Found the bottom here, mid-July last year, middle of July. From there, she jumps up, goes sideways for a while, and finds the high of the year right in the beginning of March at 117.67. Well, from there, she drops. Now she's going sideways. Okay, but here's the bottom right there. Now, I say this over and over and over again. You're going to make most of your money buying low, selling high. Well, you can't get any lower than the low of the year. Okay, that's basically the low of the year. So from here, looks like everything's moving up. Is it? Is it not? Well, only time's going to tell. But I'm going to take it for a ride for the week. Bought it on Monday, sold this Friday's 83. See, I bought it at 84, but I'm selling it at 83. Now, why does that not make sense? Let me show you how it looks. All right, so we all can agree that currently this is the 30-day chart right here. Here's our high about 30 days ago. Here's our bottom about 3 weeks ago. She went up, she came back, she went up. Okay, she's on her way up now. All right, fine. That's what it looks like. Well, that's exactly what it looked like yesterday. But let me show you why I jumped in yesterday. Scott Cook, how are you today? So let me show you why I jumped in yesterday. Because at 84, it made sense. Even at 83, yesterday it made sense. Well, look at the numbers we're looking at. I have to do a little bit more because it's not showing. Okay, so currently, right now, okay, the last traded price was 84.85. Well, you could call that 85 because it's pretty close. The strike price here, 85 is the closest right there. But look at what it's paying. It's paying $3. Now, I know that might not sound like a lot to you, but I'm looking for a simple, safe, predictable, and I want to really, really make sure my money's not at risk. Because unlike some of you in the audience, I am 61. I don't want to have to go back to work. Now, I don't mind, but I don't want to. And I've been working since 1973. At some point in time, we all should have the ability to have a comfortable life doing what we enjoy. I actually enjoy what I'm doing, sharing my knowledge and hoping some of you guys realize that there are different ways of investing. There are safe ways of investing, if that's what you want to do. Well, my number one priority is capital flow, keeping the cash rolling in on a weekly basis. Number two is the preservation of my capital. Now, Calamon Bluestone, I'm poor, I can't risk, so I like safe. I'm going to agree with you 100%. Okay? I didn't grow up with a silver spoon. As a matter of fact, my mother had 6 kids. My father left in the 60s, so it was just mom for a long time. So yeah, we were your typical welfare baby, welfare family. 6 kids to a single mom living in the suburbs of Boston. Yeah, it was an interesting growing up, to say the least. So now I know what it's like to be poor. I know what it's like to be broke. I know what it's like to work since you're 13 years old. Okay? I had my first job in 4th grade. I think I was like 11. 11 when I had my first, holy cow, 1973. That was a long time ago. But besides the point, honestly, do you believe in XRP? I love the idea of XRP. I do. However, it's not going to fit what I'm doing because I'm looking for cash flow. I'm not looking for, projected sometime in the future being worth something more than it is at the moment. So, it's great for what it's starting out to be, but it's not in my little sandbox, so to speak. World of Optimism wants to take a look at Ford. Okay, I wrote it down. We'll take a look at it. Uh-oh. SYBAU. What the heck does that mean? SYBAU. I never even heard of that one. SYBAU. I'll take a look at it in a second. FFS. FFS. All right. Sit tight. Let's keep on going with the story. Starbucks, here we are. So, at 84, 85, that's current price. I'd be looking to sell the 85s because that's the closest right there. 85 going for $3. Well, that's more than 3%. But what I decided to do, I decided to buy at 84 and then sell the 83s. So I would be losing $1.85. But the the 83s were bringing in $4. So I'm making 2% and I have all the way to 83 and I'll have all my money back on Monday. So looks like, so I bought it, someone's going to take it from me, and then I have all my money back, plus a nice little 2%. Now, 2% you might not think is a lot of money, but add it up, because I do this every single week, and I've been doing this every single week for the past 20 years. It just recently have I started sharing with you people, because you know what? I feel compelled to share my knowledge. Great, works out if I help a lot of people. All right, that being said, all right, next on the list is going to be SoFi. Why the heck are we looking at SoFi? SoFi's not on my list. All right. Not on my list, but it's on someone's list. So let's take a look at why I don't like SoFi. SOFI. Now, I tell everybody, if you're serious about investing, if you're serious, my voice sounds terrible. If you're serious about investing, you do need to have a financial website handy, and you need to know how to navigate through it. Okay, so how do you find out what is good? What are the actual numbers for the company? So, what's their average high-low for the year? What's their average movement? Is it like a 30% movement, 40%? What do I mean by that? What's the high of the year as opposed to the low of the year? Because look at it this way, it's a train that is continuous, and we're just looking at 1 year. A year ago from today, to right now. What is the high? What is the low? What is the fluctuation? Is this company consistently profitable? What are they actually really worth? What is their cash flow like? What is their book value? This is why you need a financial website. So there's a bunch of free ones. Google Finance. I like Yahoo Finance. I've been using it for decades, literally decades. And I've never even looked at anything else because everything I need is right here. And I know where it all is. All right, so here we are. SoFi. Am I reading that right? Or are there no dividends on SoFi? No, there are no dividends. So I ask myself, am I in the right place? Dividend stock talk? Well, isn't the first part of that dividends? Why are we looking at a stock that has no dividends? Ooh, Bill wants to take a look at AAP, Advanced Auto Parts, and APP. Uh-oh, what the heck is APP? Okay, Ruby Reed, Misty, MSTY. I'm going to say the same thing to you that I said to the guy who suggested me to take a look at SoFi. Go take a look at any financial website. Put in Misty. See how continuous they're increasing their dividends to their shareholders. I'll save you the idea. It's not 20 years, okay? 2 decades, 20 years. Misty, no, doesn't fit. Sorry. It's way too young of a company. They're way over leveraged, in my humble opinion. What do I know? Okay, just doesn't work for me. Anyway, let's get out of this one and get back to where we were. Next on my list, iBit. Who suggested iBit yesterday? iBit. I think that's going to be a no. What do you think? Okay. 30-day high, 30-day bottom. Look at where it is now. Yeah. No, thank you. Sorry. No to iBit. Oh, we've been waiting for this one. Estee Lauder. Love Estee Lauder. Ooh, look at that. High, low, was, is, drop, up, down, up. I love this movement right here. Estee Lauder finds the bottom there for the year. Now she's bouncing up. Well, I want to get a good look at that. But before I do, is it going to be worth my while financially to actually invest in Estee Lauder? Well, let's take a look. 59.59. Well, the closest one there is going to be the 60. And look what the 60 is going for. 270. Now, we only got 3 days left. So could you imagine getting in this on Monday? Well, because today's Tuesday. So we missed Monday, we missed Tuesday. That's 40% of our premium right there. It might be better to look into next week's numbers as opposed to this week. Because this week we only got 3 days left. So let's take a look at Estee Lauder. Do I like AT&T? Floats, I love AT&T. Unfortunately, AT&T's just, the numbers just don't work at this moment in time with AT&T. What about ULTY? ULTY. We'll take a gander at it. Might not be able to get to it tonight because I got a long list from last night I still haven't gotten to. Alrighty. Now, weirdo with a beard. I'm not quite sure what you mean. $3 for a Starbucks? Not quite sure what you mean by that, but alrighty then. Ooh, who do we have over here? John, good evening. Givers, good evening. Someone, yo, what's happening? All right. Okay, let's get back to where we were. So, Estee Lauder. Let's continue with Estee Lauder. The high, low, all the kind of nice, neat, fun stuff. Let's zoom in a little bit closer. I'm missing the front part. Yeah, I gotta make that screen smaller. Gotta make that screen smaller, dude. No, that ain't it. That wasn't it at all. Where the hell did it go? There it is right here. All right, make it a little bit smaller. They really should have someone else in charge rather than me. That's funny. All right, so let's take a gander. Here's the high right over there. I want to see what the high for the year was for Estee Lauder. Can you imagine this? $150 a share, and then she drops down to 50. That's a 66% drop, my friends. Oh, let's push this up a little bit. All right. See that? The highs up here, 150. The bottom's down here at 50. So from 150 down to 50, that's a 66% drop in Estee Lauder. Holy cow. All right. So let's take a look. A year ago, we're at 149. Yeah, we already saw that. The last 90 days. Here's your last 90 days. The high, the low. Where was it? Where is it? Look at the movement. Up, down, up, down. Now she's going up. Nice and strong movement to the top side. Great. It's got a lot of ways to go from 50 up to 85. Look at where it is. Well, it looks great on the 90-day chart, but what does the 30-day chart look like? The last 30 days. Take a look at that. Looks almost the exact same. Up, down, up. Okay, cool. What do the numbers look like? Well, let's do a sample trade with Estee Lauder. Now, I have bought Estee Lauder in the past, okay? I buy something, it moves, I take my profit, I go on, and when it looks like this again, I'll jump back in. Okay, so let's take a gander. 59, let's take a look at the 60. All right, so the $60. $60, here we go, covered call. 60 bucks. One contract. At the market. Now, if you don't know why I choose a market order opposed to a limit order, let me briefly explain. A market order fills instantaneously. So as soon as the market opens, it's open first thing. It's also an MOC order, or market, wait a minute, MOO, sorry. MOO order, which is market on open. MOC, which is market on close, but no. Anyway, a market order will fill instantaneously first thing tomorrow morning. So at 9:31, I own and I sold. So I bought the stock and I sold the option all before 9:31 tomorrow morning. I want the full, 3 days. Now, also the reason I do that is because the stock price and the option price are tied together in this one order. So one gets filled, the other one gets filled instantaneously by the numbers that are usually on here. So I'm okay with those numbers. Let's take a look. Okay, so buy one covered call Estee Lauder to May 25, which means the option is going to expire in 3 days, which is this Friday afternoon. The $60 call option against Estee Lauder's stock at the market to open. It's 2 trades. To open means you're opening 2 trades. You're opening a stock trade and you're opening an option trade. So that's 2 trades in one, the covered call. The nice thing about it is that the option trade will close this Saturday. Okay, win, lose, or SOL this Saturday afternoon, that option is going to either be exercised or it's going to expire, one or the other. Okay, but that's definitely. But the first order, buying the stocks, once you buy it, it is yours until you sell it. So the first option I sold, if they buy it, great. If they don't, well, that's fine too. Wolf wants to take a look at Coca-Cola. It's on the list from yesterday. It's already on the list. Do you have more winners than lovers? Do I have more winners than lovers when it comes to option trades? I'm not 100% sure I understand the question, M, but okay. Estee Lauder reports earnings in May. Would you still take a position or wait? I'd take the position because you're not going to make any more money, okay, waiting for it to go lower. Well, it all depends on what you personally feel. Okay, see, I like Estee Lauder because it's at the bottom. It has a 66% drop from the top of last year. Well, fine. It's like I'm thinking it's a 66% discount on Estee Lauder. And look at the premium I'm going to collect. We're going to go through those numbers in a second, as soon as I can figure out what's going on here. All right. Poor man's trading. James, are you streaming your screen? Do not see it tonight. Uh-oh. Oh, crap. I forgot to hit the button. That's some funny shit. Okay. Sorry about that. I forgot to hit that button. All right. So I forget where I was. Where was I? Okay. So here's the order. Buy one covered call Estee Lauder. The $60 call option. Okay, currently it's at $59.59. All right, so here's my maximum profit right there. This is what it's going to cost me. Let's do a little bit of math and see what kind of rate of return. Now see, no matter what, you got to keep in mind what it is I'm looking for. I'm looking for a safe, predictable, consistent trade, which I can do every single week and not put my money at risk. Because the money that I have, it's not being replenished by anyone. This is it. Monroe, give 100 yield. All right, Barbara Talk, thank you. Not quite sure what that means, but all right. Oh, that was good. William, good evening. Allie, hello, my name is Allie, my friend. How are you? I am from Iran. I am happy to see you. Ali, good evening. Namaste. I don't know what they say there, but I'm going to say namaste, greetings, or shalom. Welcome. All right, anyway, besides the point. Profit. Let's take out the calculator, find out exactly what the rate of return is. Remember, I'm looking for 1% every week. Now, you might be asking yourself, why 1%? Well, I don't want to take the risk. Sorry. Okay, I don't want to take risk yet. I want to make 50% or more per year, because 1% every single week is over 50% every year. And that helps me live a nice, comfortable lifestyle. Okay? Anyway, let's continue. Calculator. Okay, so to find out the rate of return, we take the profit, okay, maximum profit, 322.50. $322.50, and then we divide it by what the stock cost. Well, let's figure that out. Cost of the trade, including commissions and fees, $5,678. Okay, but remember, that's an investment. It's not like you're spending it, you never get back. No. You own 100 shares of that company. So you own part of the company. That's the great part about it. And hypothetically speaking, if you do it right, you own 100 shares of a company that is profitable, continuously increases and shares their profits. That's why I like dividend stocks. Worst case scenario, I get a higher dividend every 90 days or every quarter, however you want to look at it. But I want to go one step further, and I want to sell a covered call against that position every single week. Because every single week, I want some kind of income from all my stocks. So every single one of my stocks I own, I write a covered call against it every single week. That's my job. Okay, my job is to pay for my way through life. So I don't have to rely on the government. So I don't have to rely on my children. I just take whatever money I have and I make a nice return on it every single week. Can you do Maro for me when you can? Thank you. Barbara Talk, how are you doing today? Maro, I never heard of Maro. All right, anyway, you take the profit, $322.50, and you divide it by the amount that it cost, $56.78. Okay. Divide 56.78. I don't know about you, but 5.6% for 1 week. I think it's phenomenal. But that's just me. What the hell do I know? Don't listen to a word I say. Do your own research. I'm glad you're here. Thank you for showing up. Thank you for your interaction. It's great. But never listen to someone you don't know. You don't know me. Drop me a number. I'll give you a call. Then you'll get to know me. Other than that, I'm here every night answering whatever questions you have. But if you really want to talk, seriously, you really want to talk, drop me your phone number. I'll give you a call. And believe it or not, people do. People send me their phone numbers. And I call about 3, 4, I think I called 6 people in one day once. Because people are a little bashful. They don't want to give out their numbers to a perfect stranger. Well, I'm a stranger, but I'm not perfect. Anyway, let's keep on going. So I like the idea of 5.6% for Estee Lauder for the week. But the big question would be, are you okay buying Estee Lauder at this price with the intention of never selling it, but selling a covered call against it every single week? And if it just so happens to hit your target price, which at this moment in time, it would be $60, because if I'm buying it for $59.59, the highest rate of return I'm going to get is the $60 call strike. So great. Someone can buy it from me at 60. If not, I will do a covered call every single week. Okay. So that being said, I love that one. I'm going to write that one down. That's the winner of the week. What was that? 5.6. Ooh, no, 5.6. That beat Starbucks. Starbucks was 4.1 the other day. I'm surprised. 5.6 for 3 days. That's quite a bit. Now, that's not guaranteed that this is what it's going to be like tomorrow morning. Because as soon as the market opens, all these numbers are going to change. The math stays the same. What do I buy the stock for? What covered call do I sell? What rate of return is that? Is that a good place for my money? Is that a safe place for my money? These are questions you should think about. Now, for those of you retired or older than me, okay, I understand if you want safety first before cash flow. All right, hold on a second. PLTY. What the heck is PLTY? Stella wants to do Pfizer. PFE. PLTY. I have no idea what that is. John Deere, that's DE. Shalom, kitchen prep. All right, Joseph. Does it matter that Estee Lauder's earnings are coming up? That's why it's 5%. Now, Jose, I'm going to agree with you. Okay, that is one thing you can't ignore. They have their earnings coming up. Okay. So the big question is, are you relying on what the earnings may tell you, or are you relying on what the stock price looks like and what the flow of the cash looks like? Let's go back to where we were. Okay, you can't really deny this. Here's your 30-day high. Here's your 30-day bottom, and it's steadily going towards the upside. Okay, and she's just bouncing off of the low of the year. The low of the year. Best time to buy a stock is at the low of the year. Well, where is it? Well, for Estee Lauder, at this moment in time, that's the low of the year. Okay, after a 66% drop, made a bottom here, turned around, now it's going back up. Is that the case? Well, that's a question only you can answer. Okay? You have to decide, is this the right company for me? Does it make sense? Am I okay with owning it for a long period of time, if that's the case? All right, anyway, Estee Lauder, next on the list. Let's do some Ford. Ford. Oh, la, 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 la. All right, here we go. Ford. First thing I will always want to look at is the 1-year chart. The high, the low, where was it? Where is it? What is the motion of the ocean? Down, up, sideways, down, now back up again. 10.15 at this moment in time. I didn't think it would go over 10, and it did. Brim and Bones, could you please do Pfizer? I will get to it. It's on the list. Scotty wants to know what's the minimum option bid and ask price when evaluating returns. Okay, Scotty, it's always about the numbers. I'm looking at the numbers. What is the rate of return? What am I paying? What am I getting in return? That's my main factor, and I'm looking for 1% or more. A lot of times I'll come up with less than 1%. I'd say no. Marrow, yield max, please. Oh, if it's a yield max stock, it's definitely going to be a no. Okay, Barber Talk, terribly sorry about that. If Marrow is a yield max stock, it's going to automatically be a no because they're not 20 years old. Yo, thoughts on SE stocks? I have no idea what SE stocks means. Hammer time! No way. PLTY? What the heck is PLTY? So, Barber Talk, I appreciate that you like that idea. Now, don't get me wrong. Yield max may be great for the younger generation. And the only reason I say that is because it's not a dividend stock. It doesn't have 20 years of dividend payments. So there are so many companies that do. I don't see taking out one company that does work and favoring one company that doesn't work. I don't know if that makes sense or not, but if it doesn't fit, I'm not going to buy it. BMY. Oh, Bristol Myers Squibb. I like Bristol Myers Squibb. BMY. All right, wrote it on the list. Yeah, Hammer Time Yield Max is going to be a no automatically because it's not doesn't have the age. No, don't get me wrong. You know, certain things come with age. One of them is predictability and consistency. Okay, so if I'm going to put my money into a company, now this is for me. You guys got to figure out what works for you. But if I'm putting my money, my own money into a company, I want to make sure it is a good company. It's been around for a while and is profitable. Okay. Parteen, Tom McCall. Okay. SE. What the heck is SE? Oh, wait a second. We're doing Ford. Let's finish up with Ford before we do anything else. Okay, I'm going to stop the questions for now. Okay? I'm going to stop all the questions for now. Let me finish up with Ford. High, low, is. Look at the motion. We've seen that. 10-15. Okay, the 1050s are going from 9 to 10. This is that perfect example where the numbers just don't work for this week. Because remember, there's only 3 days left. Look at what the $10 option's going for. 29, but I'm losing 15 right up front. So if you take the 15 off the 29, it means I'm walking away with 14. Yeah, okay, that one would work. But the 1050 doesn't work. Okay, the 10 would work in this instance. So let's do one with the 10. If I buy it at 10.15 and I sell the 10s, just let me see if I can explain it a little bit better. The current price right now is $10.15. So if I buy the stock tomorrow morning at $10.15, well, now I own it. I can do whatever I want with it. If I want to sell it for less than I paid for it, the $10 strike price, that's less than I paid. But look at the premium I'm collecting. The premium I'll be collecting is 29 cents a share. So in effect, I'm buying it at 10.15 and selling it at 10.29. Okay, because you add the strike price, $10, with the premium you collect, 29 cents. So effectively, my sale price would be 10.29. And if I buy it at 10.15, sell it at 10.29, what is that? Is that 15 to 29? 6? No, it can't be that bad. 10 cents would be 25. Okay, 25, 10, 14. So it's 14 cents a share. Why did it take me so long to figure that one out? So I'd be making 14 cents a share. Now, it doesn't sound like a lot, but when you get into the thousands and the tens of thousands of shares, yeah, then it adds up. Right? But profit is profit no matter which way you look at it. And a 14 cent profit on a $10 stock is 1.4% for the week. So do it percentage-wise. That's 52 weeks in a year. So if you get 1.4% every single week, that's going to be 75% per year, maybe 80% per year. Well, that's a nice rate of return for 5 or 10 minutes of your time. It doesn't take long. Just pick a good list of stocks and then trade them as they move. Because they all do the same things. They just don't do it the exact same time. Ford might be up. General Motors might be down. AT&T might be bouncing off the bottom. I don't know where Hewlett Packard is, but they're all striving for the same thing. They go up, they go down, they go up, they go down. Find a whole bunch of good stocks and just follow the trend. When it goes down, that's when you buy it. When it goes up, that's when you sell it. It's not that difficult, especially when you incorporate the dividends because they're consistently profitable. The stock options because you get a little bit more leverage and consistency. Okay, you add everything together. It was created for my 9-year-old daughter in 2008. It's simple, safe, predictable, consistent, no way for her to lose. It was created for her. So yeah, it works so good. It's basically the only thing I really do nowadays because, it takes hardly any time at all. I'm in, I'm out. Thank you very much. See you next time. All right, let's keep on going. Check it out, check it out. Yo baby's in the house. What's happening, yo baby? All right, what do we have over here? Oh, yeah, so Jose wants to know, does it matter that Estee Lauder has their dividend or their earnings reports coming up? It could, if you rely on those type things. Now, I don't like the earnings reports because I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. So it's not always a good indicator for me. All right, poor man's trading, 1.4% roughly. Yeah, well, that's not bad for 1 week if you can consistently get it every single week. Okay? Thank you, poor man's trading. John, what about 3M? Dividend was cut in 2024 when they spun off part of the company. Otherwise, the dividend was very consistent. Increase that. John, you're absolutely correct because they went wrong in the company and then they split off. I remember because I was trading 3M at the time. And it had a really cool option place. And hell yeah, I'm doing that one, only to realize that it was